Okay, well, good afternoon. I am very excited to talk with a couple of gentlemen who are specialists in Class B industrial, which is also one of my favorite topics to discuss. And I had a chance to chat with Hunt and Zach a few times now, and I'm always excited anytime we get an opportunity to do a deep dive into this. So, guys, just before we even do a start on this, I'd love to just get your background and even hear a little bit about TruCore. I know you guys both have MBAs, accounting for Hunt and civil engineering for Zach, but perhaps you could even just explain how you got into industrial real estate and your journey to get where you are. And maybe Hunt, I'll start with you, and then Zach can go after.
No, that sounds great, Chad. I really appreciate you having us on. Thank you also. Just wanted to say before we get started, thanks for everything you do. Have really enjoyed the community, this industrial community that you've put together, and it's been fun to connect with some people in the group, and hope to continue to connect with others that enjoy talking about industrial real estate. So it's fun. Appreciate all the content you create. But yeah, so like you said, my background was accounting. I grew up in a small town in Oklahoma. I went down to Dallas for a few years and then came back to work at Stan Johnson Company, net lease brokerage business about 10 years ago. Zach and I had an opportunity to work with a lot of really smart people there. We were on what was historically over the life of Stan Johnson Company, the highest producing brokerage team. And what we did a lot of in the net lease space was industrial and office. And over time, we started, not only advising on the investment sales side, but also forming joint venture partnerships with preferred developers and helping them to capitalize their pipeline of build-to-suit projects. So one thing led to another. We had put a few together, and ultimately we had a little bit of liquidity internally and started bringing JV equity ourselves to really good developer clients and relationships that we had over about a 6-year period. We did 60 plus JV equity partnerships with different developers across the country, which then, there was some investment activity going on within the brokerage business, but that really was the catalyst for us to have an informal investment arm within Stan Johnson Company. And we were also, we had the benefit of, there was at the time 15 offices and 100 brokers across the country, that we would get some outright acquisition opportunities as well. So we were doing, a handful of industrial acquisitions a year. And around that time, I transitioned out of the brokerage world into this informal investment arm within Stan Johnson Company. So over time, the more we did, the more offense we wanted to play, and the more opportunity we felt like was out there. So as we wanted to formalize it coincided with Stan selling the brokerage business. So he sold the brokerage business to Northmark out of Minneapolis, and that was the natural time for us to formalize TruCore Investments, who we are today. And we really took a look at the time we were a bit of a deal shop. We were looking at a lot of different opportunities. So we took the opportunity to we wanted to focus and specialize and look at where we had the most experience and expertise. So that was the industrial space. And specifically, and we can get into it, specifically, we believe in the tailwinds and our unique position in the market to be able to compete in the specifically Class B industrial space, value add, Class B industrial, sub-institutional. So we started, we put a flag on it, and Zach had been spending a lot of time and had really carved out an expertise and niche in the brokerage side in Class B industrial, and then also specifically in IOS, industrial outdoor storage. So Zach made the jump over to TruCore as well when we had the carve off from Stan Johnson Company, and then we've just been going strong from there. So I'll let Zach give a little bit of a little bit of color on his specific background and his expertise in the iOS space.
Yeah, thanks, Hunt. That was a detailed overview. I don't need to add too much to it, but a little bit of a personal touch. I too got my start in the commercial real estate field with Stan Johnson Company, joined in late 2010, and so had a good 12-year run there. Came in 2 years, I think 3 years before Hunt came to Stan Johnson Company, and so I started out as an analyst on a brokerage team, and then when I moved up to the brokerage world, hired Hunt in behind me as an analyst, and he was a much better analyst than I was, and has since taken off from there. So we've been working together, as Hunt said, for over 10 years. And before I got into commercial real estate, I was a civil and structural engineer and did that for a few years out of undergrad, and then naturally made the move up the food chain, as I call it, into brokerage, and then now into the investing world. So kind of been in related fields since the start of my career, but specifically what we're doing at TruCore, and since I moved over from brokerage to the principal side, it's been a whirlwind. It's been an exciting 15 plus months here since I moved over to TruCore to work alongside Hunt and grow this platform. So just really excited about it, and honestly looking forward to a good discussion here. We're happy to tell you kind of what our conviction is on our strategy, and any other thoughts we have, and back and forths about the goings on in the marketplace here today.
Yeah, and thanks for that background. I feel like I know you guys well already, but for people who don't know you, that's very helpful to give some context. So thanks for that. So I know that on your guys' buy box, Class B value add industrial, you'll look $2 to $50 million, perhaps even higher. And I noticed one thing in particular. It says you guys would consider 150 different markets across the U.S. So maybe Zach, I'll ask that question first. What markets, I suppose, are of most interest because I know you're all over the U.S. already, from Florida to Oklahoma to Indianapolis. Like, you've already got a lot of markets, but what are your preferred markets, or are you just open to any one of those 150 markets if the right deal comes up?
Yeah, great question. And before I dive in there, I almost forgot to mention at the beginning, I showed my kids the video of the Fagus Factory Lego set that you created. And I told them I would ask, how do I get my hands on a copy of that? Or thinking about let me know how I sign up, because that's so cool. And as you have kids, and so do I. I mean, there's Legos in all corners and crevices of my house that I find all the time. So really awesome that you've given some credence and shined a spotlight on industrial Lego sets, and I think that's awesome. So kudos to you there.
Yeah, thanks. Oh, and then just real quick to that answer is I'm trying to, the guy who I paid to design it, I asked him to get me the piece list so that, and I'm hoping that there's even a way that you can just go on to one of the brick resellers and order all the pieces in one fell swoop. Awesome. And then I've got the instructions. So as soon as I have that, I'll just send it out, and then you can just go onto that site and order them, because I've had a few people that have requested it too. So yeah, if anything I can do to help make industrial a little bit cool is kind of like what I'm trying to do. And I mean, the three of us and everybody on this call, we all just love industrial real estate. So yeah, it's thanks for that. I'll definitely get you a set so you can give it to your kids.
Awesome. Sorry for the sidebar there, but to answer your question, we say we're in the top 150 markets looking, and we truly mean that. Given our background in net lease brokerage, it really lent itself to doing deals all over the country when we were in the brokerage business, and we built and maintain a lot of relationships still from those days. And so as we were looking at what do we want to buy, where do we want to buy, it was natural for us to say, some groups say we want to dive in on 1 or 2 or 3 markets and go 1,000 miles deep. But just given our relationship base and our knowledge base of having worked deals all across the country, it was just natural for us to say, okay, we're going to have a little bit more of a broad brush in terms of where we're looking to buy. And from there, given the fact that there's a lot of other groups out there that maybe are focused on primary markets only, or their own particular region, we felt like it was a way to distinguish ourselves from the masses a little bit in the Class B industrial space by really having a nationwide acquisition platform in this space. Are there markets that we know more than others? Sure. Are there markets that we have a preference for more than others out of the top 150 MSAs? Sure. But if you send me a deal in Sacramento, we don't know anything in Sacramento, California. If you send me a deal in Sacramento and we can underwrite it and it makes sense and there's a compelling strategy for it, absolutely we'll buy a deal there. We do own, you mentioned Indianapolis, Tulsa, Oklahoma City, Northwest Arkansas. We're buying a deal in Birmingham, Alabama right now. We own some deals in the Tampa, Florida MSA. We've bought a deal late last year in the Florida Panhandle. So honestly, we really are looking in a lot of different places. Us, like a lot of other buyers in this particular region, we love the Midwest and we love the Southeast in terms of industrial for what's been going on in those regions for obvious reasons. And kind of a little bit more of our familiarity here, being based out of Tulsa, Oklahoma, and being a launch point to those areas more quickly than West Coast or Northeastern United States. But honestly, we will look anywhere, and that's kind of a defining point of our strategy to truly have a nationwide approach.
I'm guessing there's brokers, perhaps even on this call right now or listening afterwards, who would be quite excited to send you guys deals, knowing that you're looking anywhere over the U.S. So about later on, we'll put links to all your guys' information so they could reach out to you. But I find that really cool because there is some investor groups that will only look in one market. They might just say, we only want to be in Dallas or we only want to be in Toronto or wherever it is. So the fact that you guys are broad will probably have a lot of deals get sent your way just as a result of people knowing about that. So I want to get a little bit more specific on what an ideal deal looks like for you. So Hunt, maybe I would turn this one over to you.
Sure.
What checks the boxes? Like if somebody sends a deal, what does an ideal property look like for you guys?
Yeah, so we do have a value add focus. So we're underwriting everything typically to a 5-year hold period or less. And because we have a value add focus and we're trying to hit value add returns, a lot of that strategy is more of a real estate focus, the fundamentals of the real estate, the property focused than maybe a traditional net lease that has 15 years of term, and you're really underwriting the credit more significantly of the tenant at that point. So the biggest piece we look at is, and part of why we like the Class B industrial space is the existing infill nature of a lot of these assets. So the ability and the difficulty to recreate this property in this location. A lot of the properties we're looking at are half of what the replacement value would be. So we want to look at a well-located property and as functional of a box as possible. Because of that value add strategy, we buy typically with leases in place, but many times it has shorter lease terms or remaining or shorter WALT. So we need to underwrite the downside. I mean, that's where we really spend most of our time is underwriting the potential downside. But oftentimes we talk about the downside can be the upside because of we're buying properties with below market rates in place, below replacement value. If there is a vacancy situation, that might be the catalyst for us to mark rents to market more quickly and create value there. So step number one, do we have a functional box that's usable to a broad brush of tenants? We do a lot of IOS, and what's functional in the IOS space maybe is different than what's functional in the pure distribution warehouse space. So there's caveats there, of course. But as you said, we play in the $2 to $10 million space on a per asset deal size. We'll go up to 50 plus for a portfolio, and we'd love to look at different portfolios. But yes, 2 to 10 million, sub-institutional, mark-to-market typical strategy. We can go into a couple of our other value add strategies that we have, but I think that that's what we are initially looking at, and then we'll spend time, of course, with the credit, the stickiness of the tenant and the story there. Spend a lot of time with the market. We love markets that have population growth. We look at access to highways and access to population bases and the labor base within each market. But that's where we start.
That was a quick masterclass in how anybody should be looking at a market, because there's so many things that you said there that I completely agree with. Like that's how I look at a lot of opportunities as well. That population growth is such a key driver of the economy. I'm the same way. I always look at downside risk first, because I think you can manipulate pro formas to look as engaging and as enticing as you want. You can manipulate a few numbers here and there, and your pro forma looks awesome. But that comes after you first analyze what your downside risk is. So loved everything you said there. Completely agree with it all. I want to pull on a couple threads that you mentioned, talking about functional buildings and then functional IOS. So maybe we'll go to you, Zach, first on the iOS side, and then come back to you, Hunt, on the building side. For iOS, what makes a functional property? Because that's pretty clear. I think everybody would be like, okay, yeah, I get that. It needs to be functional, but let's dive into that more and what is functional, and also the double-sided coin. What's unfunctional, and what are some things that you'd stay away from?
Sure. Yeah. And I don't know if you saw this article this week, Chad, that BizNow put out, but they called iOS a beautiful, ugly duckling. And I thought that was pretty clever and really sums it up, because it's not sexy real estate, right? But it can be very functional, and it's a great appendage to the conventional bulk distribution, warehousing, e-commerce space, right? There's a lot of synergies that go on between iOS and conventional industrial, and how they work together. But as they're distinctly different, right? And the biggest difference is that the floor area ratio of an iOS space is typically 25 or 20% or less, right? So the building to land ratio needs to be under that 20 to 25% threshold as a first and foremost. And then from there, really the more functional an iOS property, it has to do a lot with location, right? It's you're getting these iOS properties that are in demand, not only from an investment perspective, but from more importantly, the tenant or user perspective. They're typically more infill in nature. They're located close to transportation nodes, whether it's a port or an intermodal, or even in cities with larger aviation bases in and around airport facilities, things like that. So location is really important for the functionality of the real estate. And then from there, a lot of the details from there get really tenant specific. If you've got a freight terminal or a truck parking lot, you're going to want to have a paved facility more than likely. But if you're tailoring it more towards an equipment rental yard, you can have paved or gravel yard. Generally speaking, though, fencing, lighting are very important, for iOS properties. We see that being, a big time draw and a big time advantage when groups are looking at it. So, it's a lot different than conventional industrial, but those are some things that make the building functional. And then, like I said, depending upon the user, there's always going to be some, in terms of the building, there's going to be some level of front end office, back end service, cross dock, warehouse, right? But we're not talking about large spaces with high racking or anything like that. It's more service type industrial inside the building, rather than warehousing.
Are there any things that stand out that'd be a red flag or something that'd just be a deal killer for you?
Yeah, in the iOS space, great question. I don't know. You can really do a lot with iOS with a minimal amount of CapEx or TI. So if you have a really good plot of dirt that's zoned properly, and I didn't talk about the zoning, but you got to make sure that when you're buying an iOS property that you've got proper zoning, and you can use that. And if you have the zoning, it's gold, because municipalities are not giving that away or allowing more industrial outdoor storage to happen by and large. So if you have a well-located piece of dirt that's zoned properly, it's really hard to find red flags other than that. I would caveat that with obviously environmental, as we know, with any industrial property, IOS or otherwise, making sure you've got clean bill of health on environmental is an obvious thing to check out early on in the process.
We've personally we've started to shy away. Zach, let me know if you agree. We shy away from some sites that are pure. Maybe it's pure truck parking with no building on the property. I know there's a lot of really successful sites, especially that are near bulk distribution and some of the really large new development that's gone on. But where we've chosen, it just the flexibility you have with an iOS site seems to exponentially be higher when and it doesn't have to be a huge building, but some type of building for the folks on site that we're typically that's typically a requirement for us.
Yeah, that's well said, and that's a good point. We have been shying away from just a pure lot with no building on it.
Yeah, and I think that's a misnomer that I'm hearing from people looking to get into iOS investing, is that they think that that's what it is. They think it's like a 3-acre parcel of land that's undeveloped, no building on it, and they're just going to rent it out to semi-truck drivers. And I do think that there is a market for that, but that's a lot tougher because now you're renting to individual tenants and it becomes a very management intensive. Whereas I'm assuming that what you guys are pursuing is getting a single tenant or perhaps a few tenants onto that site, and they're high quality tenants, and you're securing them to longer term leases the same way you would with a normal building. Fair assumption?
Yeah, that's exactly right. And we've studied the managed truck parking world and thought about that. And for the reasons that you elaborated on, Chad, we just decided, if we're buying properties all across the country, I don't want to manage renting out a single space to a single driver on a monthly basis, from afar. Much more management intensive. And there are groups out there that are doing that successfully. That's just not the strategy that we've devised for ourselves and our platform and the iOS world.
One of the beautiful things about industrials, there's so many different ways to make a go out of it. And so like you said, there are people that are doing that, and they're doing really well, and they're probably getting a really good price per square foot on the acreage for renting them out individually. There's many ways to be successful in industrial. It's another reason why I think we're all so interested in it.
Yeah, it's just where you have the conviction, and then where you want to roll up your sleeves and get to work, right? That's the beauty of it.
Yeah, well said. So I'll turn it over to you then on the building side. So same question that I asked Zach is, what makes a functional building? And I fully appreciate there's not a whole lot you can say on the yard because it is fairly basic. On the building, there's a lot more factors to account for, and I think that there's also a lot more potential problems.
Sure.
Same question. What do you look for in the building itself, and then any potential red flags or things you stay away from?
Yeah, it's a combination of a lot of things, of course. I would say the number one, looking at the configuration. Some of these properties that have been industrial for 20, 30, 40 years, they're a tenant that's grown and added on again. And then unfortunately, at the end of the day, you get kind of a scabbed together L or weird shaped building that, just back to our initial underwriting of what does leasability look like if we get this building back in a vacancy scenario. So building configuration is a big one. And then all of the things, that go into anyone looking at an industrial building. What are the clear heights? How many dock doors are there? What do the drive-in doors look like? Column spacing, bay depth, all of those different things that and kind of go into the cocktail of what we are looking for. And then it's really interesting how it varies by market some too. You can look at a certain market that maybe is a less sophisticated market than a Dallas. Something like Dallas, you may need a little bit of a higher quality asset. The tenants understand that they're looking for a certain level of clear heights and then you go to another market, and 20-foot clear or 22-foot clear is just fine for the vast majority of tenants, and a metal building is just fine for them as well. So it's interesting to see the variance by market. So as we get in and roll up our sleeves and get to know the market and understand feedback from different broker relationships we have in those markets, that of course influences what we do. But from a red flag standpoint, that will be a quick pass. Typically, if it's a building with a very odd shape or odd configuration, that maybe the site is maxed out and there's trouble accessing a back portion of the building. Clear heights, anything less than 20 feet, we're probably, you start limiting what the depth and pool of potential users there. But it's part of what we like about industrial is that you can there's a lot of users that have different needs, and as long as you have the basics, there's a pretty good, at least at this point, there's a pretty good depth in the pool of users, and we can get into some of the CapEx items as well, but the simplicity there is what we like about the space. So overall, yeah, that's what we need. A rectangle or square box is the ideal situation, and 20-foot plus clear. We'd like to have one dock door per 10,000 feet, and I'd say have a few drive-in doors is generally what we'd like to see or better.
Yeah, I've said this so many times, so I'm glad that you also brought it up because it reinforces something I say all the time: is the most important thing someone can do at the beginning of the process is to evaluate what that property would be worth vacant. Because even if there's a 10-year tenant in there, they could perhaps go bankrupt. There's so many things that could come up that even if you have that long-term tenant, that figuring out what that property would lease for if it was vacant is the single most important exercise that I think someone could do to ensure that they're not buying the wrong property for those reasons that you mentioned. One thing that's oh, sorry.
Yeah, I was just going to say one thing. It reminded me of what our investment committee says is one question we get asked is, what are the ways out of the mousetrap on this one? And it's a big part of why we like the Class B industrial space, is because oftentimes, and the user demand for these buildings remains really strong. You can look at a scenario where, okay, what if we keep this tenant and they renew? Okay, great. Usually that's a best case scenario. What if they vacate and we get the building back and it takes 9 to 12 months to lease it, or maybe even longer? What does that underwriting look like? And then what if we have to sell it vacant? And then there's also there's a number of different scenarios. You have to demise the space and get multiple users in. But even under that vacancy scenario, what we love about the space is oftentimes we're able to buy. It's almost this weird scenario where if this lease wasn't in place for 4 years and they're paying 40% below market, they could go sell it vacant for more than we're buying it with a lease in place, because the user demand is so strong. So the mitigation there on the downside to be able to, in a worst case, tenant blows out, we get this building back vacant and we need to sell it to a user and still be able to sell it vacant for our basis or better. It's that, just back to Chad, your point on the downside, looking at the downside, that feels pretty good.
Yeah. And on top of that, I mean, to try to determine what that as vacant value is, Chad, and what market lease rates are, and with our nationwide approach, I'm not going to be the first to pretend that we know what market rates are in every single one of the 150 markets that we're looking in, right? That's why our business development strategy is focused on broker-centric deal flow, building relationships with brokers and the markets that we're looking in to buy. And so we truly view the brokers that we're working with as partners in the deal with us. And we want to not just be transactional with those guys. We want to have multiple transactions over time and build a working relationship together. So we kind of explained at the outset when we're looking at a deal, like, hey, teach me about the market. Show me what the comps are. Let's dive in together. Obviously, we have our ways to get our information, but there's no there's nobody that's going to know the market better than the industrial guy who's lived the market and been in the market doing the same thing for 20 years. And so us being former brokers and having lived through those transactions and understanding the value that a broker can bring to a transaction in multiple different ways, not just sourcing deal flow, but expert insights, market insights, solutioning around problems in the transaction process. We just we're huge fans of working in and through the brokerage community, and we'll continue to do that for those reasons. So,
yeah, well
that's a
said.
great point, Zach. And I think, to your point on the specific broker knowing the market better than we're ever going to, I mean, that's a big part of, we're quick to admit that. And something that we always, it's never a requirement, of course, but something that's hopefully attractive or compelling to any broker that brings us a deal in different markets. We invite them to jump in and invest alongside us, and we love it when they do. Selfishly, of course, if they're excited about the deal, that's added glue to the transaction. But as Zach said, we were former brokers. We really truly view brokers in different markets as partners, and we want to do as much with them from a partnership lens and invest together. We've got brokers that bring us deals. We bought a deal down in Texas where a broker had brought us other deals, and he jumped in with us on a totally different deal down in Texas and we had a couple. So we'll have brokers invest with us occasionally in different opportunities, just because we've built a really good relationship and we're seeing a lot of deal flow together, and we like to lock arms as much as we can.
Yeah, there really is a power in having a network all across the country, because I'm the exact same way. I don't know every market intimately. I've got a high level view of most markets, but if I wanted to, I could call a broker, someone that I know in that market, and a really good broker can explain what you need to know in 5 or 10 minutes. And if you give them a property, they probably even know what property it is. Like a good broker, like you said, 20 years in the experience, they just have that at their fingertips. So it really is an invaluable resource. So I can see why you guys take advantage of that.
It is, and Zach has been really involved with the SIOR fraternity as well. I mean, the SIOR network has been really beneficial to us. Zach's been a member for a long time, and I know Chad, we got to connect in Chicago last year, but really, really have enjoyed the SIOR community, to be able to make relationships with different brokers in different markets has been awesome with that network.
Well, I think the two that we've hung out together were SIOR, and I believe we're at a NAIOP one together too.
Yeah, right? I think so. Yeah. You're right.
Right.
And those are my two favorite groups to recommend. Like SIOR is a lot on the brokerage side, but there's definitely some good overlap with owners. NAIOP is great for anybody. Like I'm such a big advocate of both of those groups, and I talk about them regularly. It's instant way to get value is to become a member and involved in those groups.
Absolutely.
Yeah. Well, and I'm sure I'm looking forward to seeing you guys at another one down the road too. So, well, I'm sure
we'll be there.
Sure won't be the last one. I just want to get to a couple of the comments and questions that came in here. Darren, he's a fellow OKC investor as well. He used to be a broker. Now he owns some properties in OKC, and he's crushing it. He says TruCore is the best. So you've got a big fan in Darren.
We see Darren regularly around these parts, so he's a good friend, and he's built up an awesome portfolio of industrial assets here in the area. So yeah, Darren's awesome. I didn't know he was awesome. So
Lauren says, isn't it great when the downside can actually be the upside? Like that how true is that? Is that you analyze what your downside is, and then you say, well, this could actually work in our favor.
Absolutely.
Yeah, great point, Lauren. Wyatt said, So there are a couple questions, and if you have any other questions, feel free to put them in the chat. We'll get to anything that comes in. Wyatt said, you said earlier you look to buy in markets all over the States. Are there specific markets you won't consider buying in?
Yeah, I think really the only answer that we would have for that is we say top 150 markets in the U.S. What that really amounts to from a practical standpoint is primary and secondary markets. So if it's tertiary and really that threshold, we've looked at the MSA sizes. It's like an MSA of 400,000. That's the cutoff for us. So if it's smaller than about 400,000 people in the MSA, that's where it starts to get a little too tertiary for us. Now we'll look at stuff in smaller markets on case by case basis, but that's really the only that I would say markets we won't consider buying in is if it's truly too tertiary of a market. But if it's in that top 150, we'll certainly look and see if all the ingredients are there for us to make sense of it.
I think it's been, and part of that, is our experience in the net lease space and seeing the velocity in the market for some tier 2 and tier 3 markets. But maybe I think just, sitting in Tulsa, Oklahoma and having a familiarity with that has been a differentiator. Some of the more institutional buyers will be limited to top 25, top 40 markets. That's been Zach, I was just thinking of the Ahern transaction, if you wanted to tell that story on how I think our ability to look at some of those tier 2, tier 3 markets can be a differentiator for our acquisition.
Yeah, that's a good point. And something that we had talked about. And this is an example of us getting into a transaction because we were able to find value in secondary and maybe fringe tertiary markets and jump in and be the solution. So we had a relationship with a group, a national industrial outdoor storage investment firm, and they were working on a direct sale-leaseback transaction with Ahern Rentals. This was before they got bought by United Rentals in late 2022. But there was a sale-leaseback that Ahern wanted to do directly with this group. There were 3 tranches of properties within the 3 buckets of properties that they wanted to do sale-leasebacks on. And actually it was 2 buckets of sale-leasebacks and 1 bucket of kind of properties that were vacant that they didn't want to do sale-leasebacks on, that they just wanted to sell and get out of. And so started talking with this group because they knew we understood the asset class, and their capital that was behind them only would be in primary markets. And so the vacant properties that Ahern was selling and the primary market sale-leasebacks were kind of 2 of the buckets, but the third bucket was a secondary and fringe tertiary bucket of properties that they wanted to execute 12 to 15 year sale-leasebacks on, and it was 9 properties in total. Their capital said that we're not going to touch those assets because this is outside of our buy box. But on the other side of the equation, Ahern was saying, well, you're going to buy all these or you're going to buy none of these. And so just given our relationship with this group, they came to us and said, hey, we've got to find a solution here and we've got to close. This is late October. We got to close by the end of the year. And so we were able to quickly get under the tent with them and underwrite these assets. And given our familiarity with how these long-term net lease IOS properties trade, even in secondary markets, we were able to get comfortable with the basis where we would be able to buy them at, and then knew that we had some pricing arbitrage to be able to, if we wanted, given market conditions, spin these out to the individual investor 1031 exchange buyer marketplace, because these were generally all $5 million and under type equipment rental properties. So we executed on that strategy. We bought the assets, closed simultaneously with them. And this was heading into 2022 when the market was still just absolutely bananas. And so because of that, we decided, okay, this is a great time to kind of test the water and see if we can exit these, even though we bought it at a good basis and we're fine holding them too. And we started selling off 1 and then 2 and then 3. And, the cap rates we were getting at that time, the dominoes started falling, like, okay, it just makes sense to sell all of these and capitalize on that arbitrage that we had in this deal. But that was an example of us being able to identify and having a level of experience and comfortability with, buying longer term net lease assets in the IOS space in secondary markets, and knowing that there is an exit strategy or a buyer pool for those assets on an individual basis, whereas there might not have been as big of a buyer pool to buy those on an aggregate basis, but we saw the ability to chop them up and sell them individually. So that's an interesting deal story where, we got comfortable with some secondary market assets that others couldn't find, necessarily the same value in. But that's just given our experience selling properties like that, when we were in brokerage. So,
very interesting. Are you comfortable sharing a home run deal that you may have done, either pre-TruCore or during TruCore?
Yeah, great question. Well, that specific transaction didn't. I would classify that as it ended up being really nice. I don't know if it was a home run, but maybe at least a triple. Hunt, what do you think? We probably have a couple more that we round tripped.
Yeah, we've got one that there was a about 150,000 square foot building that we had a tenant relationship with, and through a broker, of course, had a tenant relationship. They were expanding, they were split up over 2 or 3 buildings in the market, and they wanted to consolidate under one roof. So we found a building, put it under contract vacant, was able to negotiate with that user to sign a long-term lease while we were in our due diligence period, slotted them in, gave them a heavy TI package, and then once rent commenced, we turned around and sold for a spread. So an opportunity for us to identify a vacant building that needed some work. We provided a pretty heavy TI package and did some work to the exterior and replacing the roof and some things like that. But the bones, back to the point on, you're looking at a lot of these industrial buildings, a coat of paint can do wonders to a concrete industrial building, and then you're underwriting what the roof and paving look like at that point. And as long as you've got enough CapEx room there, that was a scenario where we were able to really have a home run in a fairly short amount of time, and mitigating a lot of the risk by having a tenant in place before we even closed on the property. Another one that comes to mind is a property we bought. We haven't sold it. We've decided to continue to hold it in our portfolio, but a scenario where, we look at deals that sometimes we get the question, what's your cap rate target? And it varies so much. This particular deal we bought at a 5 cap, but it was because in-place rents were $2.25 in a $6.50 market. So, there's a lot of room there where you can create value and buy something at a really low cap rate versus we've acquired properties in the 9 cap rate range. So it's more of we're underwriting to a stabilized yield on cost than anything. But in this scenario, it was a good example of a potential win-win for both us and the user. We bought the building, and like I said, the rents were in the low $2 a square foot range. Tenant approached us 3 years before the end of their lease term and said, we want to lock up our control of this site. It's a critical asset for them. They wanted to lock up control of the site for a long-term period. And so we locked them in on we got into the $6 in terms of square foot rent for the future, which is, to almost triple the rent, the NOI is a significant win for us, but it was also a win for them because we gave them a number that 3 years from now, unless there's some type of catastrophic event, we think 3 years from now, that'll probably be somewhat below market for them. So they'll have a below market rate still. And now they have control of the building for 15 years in the future. And that allows them to plan and from a strategic planning standpoint for their business, they've got that control. So I think those were, Zach, those two came to mind.
Yeah, those two. And then the first one you mentioned, Hunt, I remember we sold it in early March 2020. And we thought as COVID was setting in, we thought we were the smartest people in the world by getting out of that deal so quickly and so favorably. Lo and behold, I think we could have held on to that asset for another year to 18 months and probably sold it at 100 basis points compressed from where we sold it at.
Wow.
But hey, you
That's
take your chips off the table. A bird in the hand is better than two in the bush, right? So we felt okay about it, and moved on to the next one. So,
Well, I'd consider all three of those to be home runs for sure. Next question, any strikeouts?
ooh, great question. You know, Hunt, you can chime in here if you want, but
yeah.
honestly, not a ton of strikeouts and no deals that are coming to mind where we've fallen flat on our face. And I think it has to do with when we talked about earlier, part of our investment strategy and our underwriting process is finding what are all the possible ways out of the mousetrap and making sure that we're underwriting the downside effectively. So we take a very conservative approach when we're looking at a deal and the assumptions that we're making in the underwriting. You can make any deal work if you assume that market rents are high enough and market rent growth is high enough, right? If you're pegging on what the future might be for your building, if you ever were to get it vacant and you're making aggressive assumptions, anything can work in our value added strategy. But we try to dial that back and say, you know, let's put a conservative number on what the market rent growth is, even more conservative than what brokers and what market reports are telling us. Let's make sure that we're on the low end of what we think the market rent range is. Let's make sure that we really understand what that as vacant value is so that we can, you know, if we ever get the building back vacant and we have to sell it to a user or fire sale it, you know, hopefully we can get our money back out or maybe a little bit more at that point in the very absolute worst case scenario. So, you know, knock on wood, there hasn't been one where, you know, I can point to that we've really struck out per se. You know, we're always pretty cognizant of you know, making those conservative assumptions and then you know, managing the properties effectively and making sure that we're not falling asleep at the wheel during our ownership of the asset and being proactive with asset management, property management, those kinds of things.
I think it was an area, you know, when we were talking about TruCore and focusing and specializing in the Class B industrial space. The only thing that, you know, that came to mind for me is in the pre-TruCore days, we, like I said, we were doing some opportunistic things, and we did some JVs for some things outside of our strike zone that we don't know as well. I won't claim to be a multifamily expert or a hospitality expert, and we did one or two of those, and you know, it wasn't a disaster, but maybe didn't hit the pro forma that we hoped to hit. So I think just reinforced our goal of specializing and really investing in what we know. And there's no doubt we've been the beneficiary, as everybody has been in the industrial space, of the strong tailwinds that the market has had behind it for such a long period of time. But that won't last forever, of course. And as Zach said, we want to be as conservative as possible in our underwriting. So the day that happens, or the day, you know, some assumption inevitably misses, we're still in a position where we can do all right on an asset.
Yeah, well said by both of you guys. And it kind of always makes me circle back to baseball as a good analogy, is that there's some batters that get up to the plate and they swing aggressively at every pitch, and those guys strike out. But if you take a calculated approach like you guys are, and you're watching the pitcher and you're watching for signs and you're doing your best to either hit a single or perhaps connect every once in a while a home run, but you're very diligent about it, you limit your chances of striking out. And I think it's pretty clear that you guys have done a great job of that. We've got just a little bit more time here, so I want to get to a comment that Jim had, and then again, if anyone has any questions for Hunter Zach, please put it in the chat. Jim McKinnon, awesome broker actually in my market. He's a really good guy. He said thanks. He's going to use the one dock door per 10,000 square feet as a reference point, which I completely agree with. I don't, and I'm sure you would agree with it too, Hunt, is that it's not necessarily a ironclad rule, but I think it's a pretty good rule of thumb. He also said, especially for flex and multi-purpose, and that kind of brings up the one question that I had on on your guys' acquisition strategy? Are you looking more for distribution? Are you looking light manufacturing, or what is an ideal tenant for you guys?
Yeah, great question. We say within the Class B industrial space, we're looking warehouse, distribution, manufacturing, and IOS. So, we love warehouse distribution just as much as any other conventional industrial investor out there, but we recognize the value in acquiring manufacturing properties too, or light manufacturing properties. I mean, there's a lot of value to be had in that. We bought middle of last year, 165,000 square foot manufacturing facility in our backyard here in Tulsa, that's leased to a custom tempered glass manufacturing company. And so they've got all kinds of specialized equipment in there, making tempered glass for cabs, for tractors and RVs all across, different RV companies, tractor companies all across the country. Those types of facilities, manufacturing. Jen, I know you had Aaron on from Motive Industrial, and I listened to that podcast and loved all the things that he had to say. I mean, we love manufacturing also for all those reasons, just the stickiness of the tenants, how ingrained they are in the facilities, how important those facilities are, and they can't just pick up and move, at the end of the lease term. So we like manufacturing for that reason. Everything that you're hearing and reading about nearshoring and onshoring, we continue to hear and see that as well. And so, those specific pockets in the country that, the Midwest and the Southeastern US that are slated to get, mega manufacturing facilities for, electric batteries, semiconductor chips, all that stuff. I mean, we're watching that, and there's going to be plenty of other ancillary manufacturing around those things. And so we have a conviction about the manufacturing space as well. And then we touched on iOS before. So, any of those asset subclasses within Class B industrial we're looking at.
Yeah, it's so interesting because a lot of the time when you hear industrial real estate, or at least now, right, it's evolved considerably even over the time that I've been in the industry. But when you hear industrial real estate, a lot of people, they just go to warehousing distribution space right now. That's just what their mind is thinking of, because that's prominent with e-commerce and all these big warehouses that are being built right on major roads. Instead of it being tucked away in an industrial parks, you now see these front and center. So a lot of people are thinking about warehousing. All the big institutional money chases the big box warehouse space. Prologis, the biggest industrial real estate owner in the world, they only own warehouse space.
Right.
So there's a lot of money and a lot of attention going after that, but there's not a lot going after the manufacturing space, which is, I love it too. I think that there's so much untapped opportunity on that manufacturing side, and it's for people like yourselves that are willing to turn over some rocks and look at deals that other people might be passing on. I think that there's some great opportunity. One more comment from Jim. Moneyball, yet on base. Yeah, that was Billy Beane, right? Was that the coach of the A's?
Yeah. Billy Beane. Yep.
Yeah.
And they didn't win the World Series that year though, but didn't they go on a pretty good run?
I think that's right. Yep. That's right.
I remember reading that book by Michael Lewis, and seeing the movie, of course, as well. It was a great book. So yeah, good analogy there, Jim. Yes. And then he also said dock-door and freestanding manufacturing fab shops allows for broader next use, which always needs to be considered. Yeah, I think that's a great point by Jim as well, is that if it is a warehouse building and it only has dock doors, that probably limits the next tenant only being in warehousing. And conversely, if it's a building with just drive-in doors, that's going to limit it to being probably just a manufacturing type of tenant. Whereas if you have a mix of grade and dock, you're automatically opening yourself up to other tenants when that one tenant leaves.
That's right. And we've looked at, buildings on either side of that spectrum. One of the things we do when we're looking at a deal is, okay, if we do get the building back, what do we need to do to the property to broaden the potential tenant base, right? And so what are some of those CapEx items that we can undertake to make the building more attractive to a broader range of users? So that manufacturing building in Tulsa that I mentioned that we bought, it was light on dock doors. And so one of the things we did when we were looking at it, okay, if we get this building vacant, we have the ability to, on this portion of the building, this side of the building, to add X amount of additional dock doors. Talking to architects and construction folks, what's the market-based cost for adding a dock door, building that into the underwriting. just to make sure that, we have a plan in place, to reposition that building and make it as attractive as possible when we have to put it on the market for lease, if that ever comes.
Yeah, great point. And I think that is a key thing that an owner can do, is to have a plan in place as opposed to being reactive. So if tenant comes and says, can you put in a dock door? By the time you go and price it and get an engineer to determine if it's even viable, that could be a several week process. The tenant might have already moved on. But if you can say, yes, we've already priced it out, or perhaps even done it, would be even better. But at least if you've priced it out and determined that it is feasible, then that could be the difference between getting a deal and losing a deal right there.
Yeah, that's exactly right. We priced it out for that building. We had an architect draw renderings on where those dock doors would be, where they're not right now. And so, yeah, if that comes, that tenant's particular lease is coming up in, a little less than 3 years. We don't think they're going anywhere, but if they do, we've got the alternative scenario plan in place and be able to show that to prospective tenants without having to, start from scratch. So that's exactly right.
So there's a great tip for anybody tuned in on this, whether you're an owner or a broker working on a property. If you have a property that only has grade or dock loading, see if you can get a cost on and determine that it's actually feasible to do, because that could be the difference between getting a deal done and not getting one done. So loved how you guys elaborated on that. So just coming up top of the hour, I feel like I could talk to you guys for another 2 hours, because there's still more things I'd love to flush out. So we might have to do a part 2 sometime in the fall here, because I'd love to discuss some more of your value add strategies and just how you're looking at tenant profiles on their underwriting, and then even diving into the building more. So if you're up for it, I think we could do a part 2 sometime in the fall.
Would love it. That'd be great.
Yeah, that'd be great.
Cool. Well, in the meantime, I'll put your LinkedIn profiles for both of you so people can reach out. And then I'll also put a link to TruCore's website. You guys are active. You're looking for deals all across the states. So if anyone's looking, has an off-market deal or something you want to put in front of them, I'd highly encourage you guys to reach out to Zach and Hunt. And even if you just had a question, I mean, you guys are awesome to talk to, and your wealth of information. So really do appreciate you guys taking the time to do this. I thoroughly enjoyed it.
Yeah, thank you, Chad. We enjoyed it as well. And, like Hunt said at the beginning, we can't thank you enough for what you're doing in the industry and just, keeping the conversation going about all things industrial and being a thought leader in the space. So thanks so much.
Yeah.
Yeah. Thank you, Chad. Really appreciate being on.
Likewise. That was awesome. Loved it, guys. Okay. Well, thank you very much. And thanks to everybody who tuned in and for the questions, and we'll see you next week.